MCX is a listed firm with a market capitalization close to 3,900 crore rupees. New Delhi, it seems changing market dynamics are bringing old foes closer. For much of the past decade, India's largest equity exchange NSE and commodity bourse MCX were seen to be at loggerheads, primarily because the latter often insinuated the former for the problems it was facing in getting clearances from the market regulator to launch equity and currency verticals. On Friday, MCX shares climbed 13.8% after a report in Business Standard suggested that the commodity bourse was in talks with NSE for a possible merger. Calls made to NSE by markets.com to ascertain the report remained unanswered. Stock exchanges sought clarifications from MCX on the issue. Analysts said if the report is true, it would be a win-win situation for both MCX and NSE following SEBI's approval to the universal exchange concept. The decision to facilitate convergence of stock and commodity bourses by allowing stock exchanges such as NSE and BSE to launch commodity products on their platforms from October is being seen as a big threat for the standalone commodity bourses. As of FY18, MCX alone accounted for nearly 90% of the commodity derivatives market. A merger will give NSE a strong base and allay concerns among MCX investors that a tough competition ahead could dent its finances. Analysts say while it may not be easy for new players to take away liquidity from MCX, predatory pricing might limit its pricing power. It is the logical move that a weakening exchange could have charted. It was inevitable, said Ajay Bodki, Chief Executive Officer and Chief Portfolio Manager at Prabhudas Limited. With NSE being the big daddy in the exchange business, the move towards consolidation would be a win-win, Bodki told markets.com. A standalone commodity exchange will find it increasingly difficult to survive in a new environment where well-established stock exchanges will be seeking to quickly gain market share, says G. Chockalingam of Economics Research and Advisory. Investors would prefer integrated services as that would require same margin money, same banking facility and platform. NSE and BSE will kill MCX going forward. It would be a wise decision for MCX. It would also help NSE get market share in the commodity segment from day one, Chockalingam said. The universal exchange concept is a risk and can lead to a rise in the competitive intensity, pricing pressure and some market share loss for BSE. However, the MCX management doesn't see significant erosion in market share and expects the overall market size to increase with regulatory boost, the brokerage noted. Data suggests MCX's total turnover for the year dropped 8.2% YOY to 53.8 lakh rupees crore from 58.7 lakh rupees crore in FY17 due to low volatility in bullion and structural changes such as demonetization and GST. MCX is a listed firm with a market capitalization close to 3,900 crore rupees. NSE, on the other hand, is an unlisted company which wishes to get listed just like BSE, but has been facing delays due to an ongoing probe into some systematic lapses. Last year, some analysts had projected NSE's valuation at around 40,000 crore rupees. Analysts rule out the likelihood of the NSE looking for a reverse listing should the merger plan work out, as the regulator may not like the idea, given the pending probe into NSE's alleged preferential access to stockbrokers in the algo trading case. These stocks plunged up to 15% on NSE. These are the top NSE losers of Tuesday's session. These are the top NSE gainers of Monday's session. HC to hear NSE-MCX case on May 26. These stocks surged over 15% on NSE on Tuesday. Commenting feature is disabled in your country, region.